Greetings, fellow fintech enthusiasts, and welcome back to Stocks Telegraph. Today, we're setting our sights on a financial firebrand, SoFi Technologies. SoFi isn't your typical bank, they're a digital financial services platform aiming to revolutionize the way we manage our money. From student loan refinancing to investing and everyday banking, SoFi promises a one-stop shop for all your financial needs. But is SoFi a true innovator, or simply a flash in the pan? Let's grab our smartphones and dive into the world of SoFi. Is it a financial force to be reckoned with, or just an overhyped fad? Before we delve into the data, we want to hear from you. Are you a fan of fintech platforms? What features do you look for in a financial services platform? Leave a comment below and share your thoughts. Now, buckle up because we're about to embark on a financial expedition to see if SoFi is a worthy addition to your portfolio. In the next segment, we'll unveil SoFi's recent financial performance and see if the numbers support their disruptive claims. First up, let's take a look at the current price. SoFi is sitting at $7.28 per share. This might seem like a modest price point, but consider this: analysts have a mean target price of $8.53, suggesting significant potential for upward movement. And this optimism isn't unfounded. SoFi has delivered an impressive performance over the past year, with a growth rate of a staggering 46.77%. However, it's important to note that the stock is currently trading 37.78% below its 52-week high. Looking beyond the current price, SoFi's financial performance is nothing short of remarkable. The company boasts a phenomenal earnings per share growth of 123.86% this year. This is coupled with a mind-blowing quarterly earnings growth of 145.19% and a substantial quarterly revenue growth of 49.44%. These figures paint a picture of a company experiencing explosive financial growth across the board. SoFi has undergone a fascinating transformation. Many investors initially viewed them as a hyped-up growth stock. However, SoFi has strategically shifted its focus toward achieving profitability. This shift has led to some investors taking their profits, causing the stock price to dip. While the current price might seem concerning, it's important to understand the bigger picture. SoFi isn't just a flashy app, they're a comprehensive financial services platform. They offer a user-friendly interface with low-fee lending products, catering particularly to young professionals and millennials. This initial success allowed SoFi to expand its services, addressing a wider range of consumer financial needs. Their membership and product count have soared, showcasing their growing popularity. The increase in both members and services offered by SoFi creates a powerful synergy. Their expanding user base allows for effective cross-selling of new financial products. This not only increases revenue but also achieves profitability at a lower cost. This strategic approach positions SoFi for sustainable long-term growth. Here's where things get interesting. After consistently emphasizing their pursuit of profitability, SoFi finally achieved positive net income in Q4 2023. However, this achievement was met with a surprising drop in stock price. This trend continued in Q1 2024, with positive net income and guidance for continued profitability throughout the year. SoFi's shift towards profitability has created a short-term conundrum for investors. The stock price dip might seem discouraging. In the next segment, we'll explore some additional updates and offer some concluding thoughts on SoFi's future and the overall fintech landscape. Leave a comment below. Are you surprised by SoFi's stock price decline despite achieving profitability? What factors do you consider when evaluating fintech companies? SoFi's path to profitability has presented a unique challenge for investors. The stock price dip despite strong financial performance can be attributed to a few key factors. Firstly, some investors might have been focused on the high growth potential SoFi previously offered. Now that profitability has been achieved, these investors might be cashing out, causing the price to dip. This is supported by the significant stock price increase in 2023, right before the positive Q4 results. Another factor at play might be the changing perception of SoFi. With profitability achieved, SoFi might be viewed more like a traditional bank stock. This typically translates to lower valuations compared to high-growth companies. Consider Ally Bank, a direct competitor to SoFi and the leading all-digital bank in the U.S. Ally's stock trades at a lower valuation compared to SoFi. However, it's important to consider SoFi's exceptional growth trajectory. Their revenue growth significantly surpasses Ally's, demonstrating their disruptive potential within the financial services industry. This is a crucial distinction when comparing SoFi to traditional players. Despite the short-term stock price dip, SoFi management remains optimistic. They are guiding for continued revenue growth throughout 2024, with the financial services segment leading the charge. This segment, encompassing banking and investing services, is expected to experience a remarkable 75% year-over-year increase. This highlights SoFi's strategic shift towards a diversified financial platform, moving beyond just lending products. The financial services segment, along with the technology platform, is expected to contribute a larger share of SoFi's total revenue in 2024. This diversification strategy positions SoFi for long-term growth, even if lending experiences a slowdown due to the current interest rate environment. It's important to note that loan originations are still increasing across personal, home, and student loan categories. SoFi's story is far from over. Their transition to profitability and strategic growth plans paint a compelling picture for their future. So, is SoFi Technologies a passing fad or a disruptive force in the financial services industry? The evidence suggests the latter. While the recent stock price decline might seem concerning, it's crucial to consider the bigger picture. SoFi has achieved profitability, diversified its revenue streams, and continues to experience impressive growth, especially in its non-lending financial services sector. Their commitment to innovation and focus on member needs position them well to capitalize on the evolving fintech landscape. Ultimately, the decision to invest in SoFi rests with you. Remember, responsible investing requires careful consideration. Analyze competitor strategies, research fintech trends, and assess your risk tolerance. The fintech industry is exciting but can be volatile. Conduct thorough due diligence before making any investment decisions. SoFi Technologies presents a captivating opportunity for investors interested in the future of finance. Their financial performance, strategic diversification, and commitment to member experience are positive indicators. However, responsible investing requires a calculated approach. We've provided the information and analysis to help you navigate this dynamic sector. Let us know your thoughts in the comments below. Do you believe SoFi is well positioned for long-term growth? What are your predictions for the future of fintech? Thanks for joining us on Stocks Telegraph. If you enjoyed this analysis, don't forget to like and subscribe for more in-depth explorations of exciting investment opportunities. Until next time, happy hunting!